Afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now session. Thanks for bearing with me there. Just had to tie up a couple of loose ends before kicking off the session today. So we are starting with a fair bit of volatility across energy markets and, of course, our precious metals, as we can see. Silver down almost 10% today. Gold's taken a 4.3% downward turn, platinum down 6.3%, and this has all come around as the tensions with the Middle East continue to push on. Unfortunately, that situation is actually getting worse. I thought for a period of time, short period of time, that things might be easing, and we may be seeing the other side, getting through it, but unfortunately not. Things are actually getting worse, and as a result, we're getting a massive amount of demand in the US dollar, which is still sustaining itself at around 100.1 at this time. Failure to break above liquidity, granted, but it is still looking pretty buoyant up at these highs here. And we are also getting a big dump in gold and the rest of them. The energy markets, currently, we had a whopping spike in UK Brent today, rose all the way up to 119.25. Really big rally there and a big push up in Brent. At the same time, interestingly enough, US crude is down 3.6%. And that's interesting because UK Brent is the benchmark oil rate, and crude usually follows suit. To see the disparity between the two is quite interesting, actually. I don't know how long this is going to last in terms of the volatility. We all know what word on the wires are. The markets are so incredibly sensitive to the geopolitical backdrop at the moment, and everything that the Don is saying day to day. It could all be over and done with in the space of a few hours. But right now, things are very, very sensitive. The main point at hand, and this is something that we all need to remember: central banks around the world have been fighting inflation for years. The back of coronavirus and the stimulus that we saw from that has been bleeding everyone. The everyday man has been bleeding them dry for the last 5 years now, in terms of the inflation rates, and trying desperately to combat them in every which way the central banks know how, and with the tools at their disposal. The only thing that this war is doing is pushing the prices of energy through the roof and therefore ramping up inflation. So it's not even, and this is very crude, but the financial markets, unfortunately, they are very crude in times of war and conflict. The only reason the markets are doing what they're doing right now is because of how afraid they are of inflation. A lot of businesses have been crushed over the last 5 years as a result of the inflation situation. Lots and lots of businesses, tens of thousands, probably millions. I don't know, don't quote me on millions, but probably millions of businesses that we have never heard of before will have all been crushed over the last 5 years as a result of the coronavirus and the following inflationary situation. And we, after 5 years, most of the central banks, not all of them, but most of them have done a relatively, I don't know, I don't want to say decent, what do I say? Good, not really that good. I mean, they've made the best of a bad situation. They've done what they could in order to get that back down again. And we were coming close. Many of the G8 nations, in the G10, we were coming close to getting back to 2% inflationary targets. But unfortunately, we're seeing a turn. We are indeed. The data doesn't lie, and the data supports a U-turn in inflation, in deflation. So now everybody is scatterbrained and running for the hills because they think, that we're going back to high inflation times. And that's why the markets are reacting the way they're reacting. It's not necessarily directly about the war. It's not about the atrocities that are being caused overseas. It is honestly all down to the fact of my money is not safe. I need to move it out of here and I need to move it over there. And that's what it comes down to. So it's an interesting one. It's certainly an interesting one. It's interesting to think where we will go from here. I mean, US crude, as you can see right here in front of the, on the chart, we're actually not not really that far away from the all-time highs, but we haven't made any significant headway back there. UK Brent's completely different picture. Completely different picture. I mean, we basically touched down on all-time highs before getting the commercial knee-jerk reaction away from there. And I think this continues trading. I mean, we just knocked out a really decent trade in this one this week, by the way, which is a great segue, by the way. Hope everybody got in on the Brent trade this week. It was really nice. We got a 1 to 3.2 out of the back of that one. So that was really decent. Do I think, D asks, do I think that crude will be a delayed surge? Do we think that crude's going to rally like Brent did, but it be delayed? I'm not entirely sure, man. I mean, that really is a crystal ball question, isn't it? I think, yeah, I mean that. I mean, if I say, yeah, you know what, I do think it's going to do it, then we're all going to start loading up, aren't we? I can almost feel, I can hear the MetaTrader 5 the little sound effects dinging on PCs right now. I'm not entirely sure. I'm not putting money there. So we've done a really nice trade in Brent this week. We've got a really decent return. We're up 2.43% so far out of every trade that's gone through the trading room this week. So definitely been a strong week. I am not putting my money on a US crude long on Thursday afternoon, just after finding out about the increased situation, the escalation of the situation with Iran in the US and the rest of the nations. I mean, Jesus, Iran is now targeting loads of other nations. They're going after bloody everyone. It's a crazy thing that's going on right now over there. So it's just too high risk. You know, there's too much inherent fundamental risk and geopolitical risk. We cannot navigate every single area of this one to make sure that we're going to come out safe and sound. And yeah, sure, we can certainly be looking at taking some profitable trades. I mean, at the end of the day, like I said, we did a really nice Brent long trade. That Brent long trade was as a direct result of fundamental push up in due to the geopolitical backdrop. That's why we traded Brent long. Not just the technical criteria. We looked at the technicals for the entry for the trade, but we traded it long because we were trading the fact of an increase in demand as a result of increased escalation. So we've kind of already played our hand there, and I think if we were to consider going long in US crude as well, I just cannot shake the feeling like we'd be getting a bit greedy, you know. So yeah, I'm gonna stay out. I'm staying out. I'm staying out of it. Yeah. What the hell is it doing just sitting there? I've got no idea. Yeah, I've got no idea. I mean, it's very unordinary. It's very unordinary. UK Brent, US crude, one's at 2.3%, one's at minus 3.6. It's 3.06. It's very strange. Yeah, it's very strange seeing the disparity between the two of them. I mean, UK Brent's actually holding its value as well at around 114. So very interesting markets indeed. It does make me wonder if the US crude one's coming. We'll wake up tomorrow morning and US crude will be trading upwards of 115, and we'll all be there, slap faces. Yeah, that's right. I know. And on the flip side, we've got risk off safe haven metals dropping off a cliff. I mean, to be fair, I would say this is probably due to military asset purchasing. I've already explained this situation several times, but just to touch on it here and now, dollar is very much in demand at the moment because of military asset purchasing. So therefore, if the dollar rises, gold naturally falls. There'll be a lot of people plowing their funds into the US dollar at the moment because they see the demand in it. So there is kind of a logical reason why gold will be selling off. But I mean, it's selling off big time. It's selling off right now. It's selling off big time as if the war had ended in one instantaneous moment. So it is a bit strange. It is definitely a bit strange to see it selling off this dramatically. It was really good for our gold long yesterday, though. I mean, gold short, sorry. Our gold short yesterday was fantastic. Looking at the size of the move now, I mean, we took profit on a 1 to 2.8 between, what, 49.68-ish and down at the lows at 48.73. Imagine if we held on to the damn thing. That's what I'm racking my head about. I mean, look at that trade. I mean, our stop losses were there, right? So, I mean, that's a 1 to 9 now. Can't do that, though. It's too much hindsight trading. Shoulda, woulda, coulda. But yeah, it's one hell of a move down. I mean, by the end of this stream today, we'll probably be on minus 5% day for gold, which is pretty sizable. So I did go through and clear down the charts. My chart profiles were looking a little bit scrappy, so I went through and cleared them all down. But we did get a really nice run of trades. We also took a couple of hits overnight. We had a cable loss. We also took a hit on. We took a hit on something else. 100% we did. I cannot remember for the life of me what it was now, but there were a couple of trades we took a hit on. It was cable and something else. But all the others were really good. Aussie NZD at the moment's here. That's going okay. I can't claim it's doing amazingly well, to be honest, but it's doing okay. We're a touch in profit at the moment, and so long as we can break through the floor, which is where we're trading at the moment, it would be nice to see that move back down to around 120.65 and beyond. If we can break through this big structural point, then the knee-jerk reaction will be all the way back down to 1982. And if we go up here on the daily time frame, it does look pretty good. This is the kind of thing that I like to see. And there's a couple of telltale signs in here that would due a really nice move in the opposite direction, right? The first is the fact that we have nice big commercial leg, okay? Really nice, big solid commercial leg, lots of commercial buying interest. We have a decent price action pullback. That's this section of the move. The secondary move is good, but very short-lived. And that's the difference. Really nice big leg, little pullback, very short-lived move. And that is because the market just needed to reach this area in here, which is where the dollars are. And once we trigger all the short orders at 124.40, this is when we generally get the really nice commercial knee-jerk reaction back down, test out a point of liquidity, which is going to be at 119.82, which is the most nearest one we have. And then we can either look at continuing to trade higher, or ultimately it will be the end of the trend and we'll see a bit of a turn in the Aussie NZD. All of which at this moment in time I'm not interested in. I just want to take the first part of the move. But decent trade anyway, nevertheless. It's a 3x return, so I'm happy with that. In other news, I mean, there's not a great deal going on in the FX space today, ladies and gents. We have a lot of ranging market structure now, or we've taken profitable trades. We had a really nice little profitable 1 to 2.5 in the USD CAD earlier in the week. But the thing is, most of these trades now, they've taken us into areas of liquidity. So, for example, like this UC is now trading into an area of liquidity. So it's now not something I'm going to be interested in until next week. Definitely eyeing up these opportunities for next week trading without a shadow of a doubt. But a lot of them, yeah, just not too keen on today. So, yeah, a lot of this sideways price action here at the moment. I mean, you know, look at this, right? It's just quite scattered, quite inconsistent, lots of highs and lows. But the thing is, it's not even like you can claim they're a really decent range either because of the structure to it. We've got these incoherent lows all over the place. Whoops, that was a bit of a dodgy one, wasn't it? So, yeah, we've got all these incoherent lows. So, you know, where's the liquidity here? Well, there's liquidity points, but there's no consistent liquidity pull. Same with the highs. We've got all these areas in here. You know, we've got this upward stroke here, but we don't really have anything established at the same degree down at the lows. So where do you trade the highs and lows to? You know, you'd really have to be dialed into just this instrument in order to pull out the pips there. So it's a little bit of a difficult one. Euro NZD at the moment, it's probably not been too much of a bad range. Actually, that one has been ranging for weeks now. Yeah, it doesn't look nice though, does it? The price actions look very poor in the Euro NZD. It might be nice to add something to the FX space. Wonder if this has got anything Anything for us? So we've got the midpoint of a W reversal. We've got some consolidation at the midpoint. Looks like the market's coming back down now to provide that retest, the proper retest, let's say, the official. But then we've got liquidity directly above price, so there's no room for a trade in there, which means we'd have to wait until the break of structure above 157.90. And frankly, I mean, we'd be back in small margin territory again if we got a break of structure there. That's not too bad, is it? It's not too bad, but we do have these highs in here, which make me a little bit concerned. Yeah, probably not. Okay, we've got there. Got this area down here. Great margins underneath. Good trading availability. Do have a TRF situated at the 50% point at around 96.15. Yeah, it's a possibility. This one is actually a possibility. Could add this to the book. Yeah, do you know what, team? I'm actually going to add that. I quite like that idea. It's got a relatively decent path of least resistance. Definitely not without its flaws, but I think a 1 to 2.5 should be quite realistic in there. Get that done and dusted in the space of a couple of hours. We've seen good coherency in recent history. So we had 1, 2, 3, and 4 successful runs in here without any failed attempts. We had a break close retest continuation through there as well, which makes 5. We go right the way back in time. We've actually got a lot of really decent margin in here. So I quite like everything about that Aussie CAD. So yeah, I'm gonna take a stab at that one. A 1 to 2.5. Looking at a net return 0.6, which would be relatively nice. Let me download that one. I think that's about it though. Aussie CAD, D's already in a trade, look. He's already left the station without us. It looks good. Yeah, it looks really good. I love that trade. That's a really nice looking one. No. Don't take your entry out of there. The entry that you've got on that trade is worth more than the reinvestment of a new trade. Absolutely. Because the thing is, if the market does take a turn, you're going to be more protected than we are. So don't give up your entry. That's the important thing. It's the most important thing about the trade, to be honest with you. So yeah, don't give it up. What are we doing? Cable, W reversal, point of liquidity 133. Could we add this to the book? I've just got to think, we've got to think tactfully now because we haven't got long left of the week. So what do we need to see from a midpoint of a W reversal, team? Okay, I'm asking, that is a question, officially a question. What do we need to wait for the midpoint of a W? Yes, thank you, D. Straight off the bat, buddy. Straight off the bat. Yeah, it is a retest. We got a nice W reversal in here on the 15-minute time frame. We need to wait for a successful retest continuation. The margin of availability in here definitely works for us. So that's a good thing. We've got the room that it may need for the break, close, and retest. So we got the breakout, we need the retest, and then we can jump aboard for the continuation. Let's just space that out a little bit. There we go. Yeah. So let's have a look. Possible trading opportunity, something like this, I would say. Maybe a 1 to 2.2. It very much depends on where the structural point is. Remember, you do have the ability to take an aggressive entry. So your entry, even though it looks quite exaggerated there, your entry may end up being down at 133.08, which means you can have your stop loss a little bit lower for a better margin, but work out a 1 to 3.1 out of the thing. We don't know exactly, but we do need to wait for that BCR. So let me highlight the BCR inside a red circle here. Key part of the process. But that's not bad. I don't mind that. So I think we'll stop there anyway for the FX space. We've got the Aussie NZD running. We're going to take a short in the Aussie CAD. We'll take a long in cable, and that's nice for a Thursday afternoon heading into the end of the week. So let's go up. So look what I said, guys. Right? Look at gold, minus 5.3%. big move down. Significantly. I mean, look, this is 5.2, and we've actually had an upward turn from there. Where were you? Where's midnight? So midnight's there. So if we take the high of the day and look at the low of the day, from high to low, that's a 6.92% move down in gold. This is big. This is very, very big. You know what I want to do? You know what it makes me want to do? It makes me want to buy it. That's what it makes me want to do. We've shaved off so many gains. All the retail trading longs have been burned. Commercial institutions are going to be ripping the profit up from the market. Once that starts taking place, we're going to start seeing the bounce and that knee-jerk continuation reaction like we do from commercial players. That's what we do. So potential target profit for this one would be about there, I would say. Let's go back down to the 15-minute time frame, and we can see already from the 15-minute time frame that's going to work. That's going to work. Let's just drag that down there. And that's a really, really nice trade. So what I'm going to be saying to myself now, right, break a structure. Where's that going to be? Probably try and encapsulate some of these lows here. Would be a good idea. We go back in time there. Doesn't really have too much coherence with that noisy area in the price action, but it's got some. I think the open of the market about there would be best. Also make sure that we clear out a lot of the lows in that area as well. Let's just drag this right the way across here for a moment and check out our available margin. So we're definitely not going to be getting trapped in anything here because we're allowing the market some room to breathe. We got money in the market down at 45.40 and we got a strong margin up to 47.20. So we'll be looking at buying gold back, target profit at 47.15 and a stop loss either the very conservative 45.89 or the aggressive 46, which will yield a 1 to 3. To be fair, team, I'm going to go for the aggressive option. The 1 to 3 just looks a little bit too tasty. So I'm going to put my money in it. Let's carry the win forwards. It's been a good week. Let's try and have a great week. Download. Right, moving on up. No more in the energy markets at this stage. Natural gas, certainly worth a look. Yesterday, I was just saying how quickly natural gas moves, and so there's no point to remove that trade from the pending orders list. Look what happened yesterday. We rose from a low of 293 up to a high of 327 in a single trading session. So this is the kind of thing that I'm talking about. The only issue we've got now, of course, is we are on Thursday afternoon. I'm going to let the pending order be because for all we know, we could have another massive day like that and end up at 343 tomorrow morning. But if the trade has not triggered by tomorrow morning when we arrive at the charts, that will be removed and then we will have to push it down into next week's pipeline, which we've already done. But we'll have to push it onto the following week's pipeline. And that takes us into the US indices. So let's have a look at this afternoon's trading parameters then. What are we looking at? We've got Dow Jones inflection point number 1 and number 2. Drag it across. Got a break close and a retest, which has just taken place with further continued downside. We've got the structural point for this move here from low number 1, low number 2. That's in there. We now need to source a target profit. Let's go up to the 4-hour chart. TP for this one. This low in here certainly makes sense from a liquidity point. Not entirely sure we'll have the margin in there. Let's have a look. Nope, that's not going to work for us, is it? Margin is way too tight. It's a rock in a hard place, this US 30 Dow Jones. Now let's move on. Let's see what the others are saying. Much nicer immediately. So we've got the NAS 100. Big point of inflection down at that area in there. We also have the area in here that the market's broken through. The breaker structure we could actually utilize as this level in here, maybe. That's not bad, team. Yeah, that's not bad actually. So we've got an entry, target profit, stop loss up there. That's a 1 to 3. Really nice. I like that. Can we work out a long? Okay, the long's got technical risk factor. So if we say that that's going to be our breaker structure for the long, we have a TRF. TRF is at this high. And then we have the target profit, which is in there. But that's not bad either, to be fair, guys. We take the trade there. We come into this area. No, it's not, is it? Or actually, could it be? That's the question, isn't it? That's the question we've got to ask ourselves. Now that we're trading in this area in the no man's land, couldn't we use this as the breaker structure instead? But then, of course, we're going to be running into that inflection point, which is then going to be the high risk element to it. No, I'm going to leave that the original plan. The original plan's the best one. Always good to work things out with yourself sometimes. Your mind can wander, but your voice doesn't. When you hear your own voice, you say things out loud, they make more sense sometimes. Something I used to do a lot when I was, back in the early years. Okay, there we go. Trade idea number 1 and 2 on the NAS 100. Don't really want to be doubling up the risk in the S&P. So I might have to revisit that US 30 Dow Jones. We bounced from there. We got a buy back to 65.97. I'm not interested in that one anyway, actually. Yeah, no, not that one today. Right, let's have a look at this Dow Jones again. What can we do? Can we make something work in it? Really don't want to be risking that point of inflection there. There's no way. 4-hour time frame's got to come down there and break through it in order for us to get any kind of enthusiasm about it. Do you know what, team? I just don't see it. The only trading opportunity I see is back above this level up here. And I'm not sure with everything that's going on right now if the US 30 has what it takes. Possibly about here. I don't want to manipulate these anymore if I don't have to. It's a horrible bit of price action on that Dow Jones. It really is. It does not make life easy. So we've certainly got this area in here which we can utilize. That's going to be the entry for a long. The market's trading real far away from it though, so we have to take that into consideration. I mean, the idea of the Dow being able to rally from 45.93 up to 46.55 and then allow us to jump on board for a further long to 46.90, unlikely. Yeah, well, I mean, that would be the idea, right? Yeah, that's the idea. The market comes down, we bounce back from this IP here, as you call it, which is good. I like that. So we've got the inflection point down here. We bounce back. I mean, on the 4-hour chart, the inflection point's going to be at the beginning of the AP, and that's here. So that's going to be your entry. But this is a big point of inflection as well. So we would be breaking into the trade, breaking the structural point, and then heading straight into a liquidity ball immediately above. So as we were mentioning a little while ago, just about the path of least resistance and always looking for that best path of least resistance, the best one that we have is all the way up here. And I just don't know if there's any point even talking about it, because I can't imagine the Dow Jones is going to rally all the way up to 46.55. Today, I just don't see it, you know. But look, the NAS 100, in all fairness, has actually got a really nice couple of trade ideas. It's got a really nice big no man's land as well, so the market can flex and move as it needs to. We're not going to be trapped in anything or get in the wrong side of it. So I think the NAS 100 works. I always do like having a minimum of 2 indices ready to go. But if the opportunity's not there, it's not there. And I don't see it in the Dow today. And the S&P 500, which is made up of 49% tech stocks, it's just the same thing, isn't it? You're playing with fire, to be honest, a little bit. We've got big liquidity down there, huge big point of inflection. If the market bounces back, that's great. But what? It's going to bounce back into our anchor point. We've got liquidity structure at 66.12. If we wait to clear that margin, then we're going to be running into the previous high, 66.40. So it just is a little bit too convoluted. So I think I'm going to stick. I think I'm going to stand my ground today. We're going to do a split opportunity. Opportunities both sides of the market for the US tech stocks. We've got the potential for a gold long. Oh my God, we're down 6.5%. It's absolutely plunging. We're gonna break structure, aren't we? No, there's no way I'm gonna short it. No way. Coming into some big areas now. The big one at 44, and that's probably the biggest point of orders that we've had in this leg for a hell of a long time. Looking back here, the biggest price action pullback probably was one of these long-term bear cycles. So from like the beginning of March 22 down to November of 22. That is the biggest price action pullback we've had, aside from the most recent crazy volatility. And that is what we're very close to now. So I won't be shorting gold. Carries too much risk. I'm going to leave the long available, and that will be that. But you can't take away from it. It's one hell of a short, isn't it? That is one hell of a short. Yeah, that's the one, mate. Yep, that is the one. That's pretty much the one. I tried to keep my zones in order. So the market's trading on this one at the moment, but when the time comes, I'll remove that one and then replace it with this one. Yeah, that's the main one. Biggest price action pullback we've had in the leg. So, yes. Right. NAS 100, both sides of the market. Gold long. Aussie CAD looking short. Already getting underway. We've got the Aussie NZD short, which is nicely underway. We've got the cable long, which we're waiting for a break close and a retest. It cannot be a pending order, that one. It has to be a break close, retest, and then you can set up your pending order once the retest is done. And that will mark our Thursday trading book, ladies and gents. So I'm going to wrap things up there. Are there any questions? You are most welcome, my friend. No problem at all. Right, team. Well, in that case, if you do have anything that I can help with, please feel free to reach out. It's no problem at all. And if not, then good luck this afternoon in the US Open. Take care of yourselves out there, and I look forward to catching up with you again soon. So take care, good luck, trade safe, and I will see you then, guys. Thanks a lot. Bye-bye.